Hey everyone, it is Evan here from the Trade Risk on Tuesday, June 12th, here with a midweek market recap video. We're going to cover all the major markets and the current market environment. So let's jump in here with the S&P 500 cash market weekly time frame. Each bar represents 1 week worth of trading, and we can look at this week's progress so far. It is only Tuesday, but we are up 17 basis points, a little less than 0.25% in the S&P 500. And if we look at this week's candle, this week's action, you can see we are sticking our head above last week's highs. Not much has changed here from the structural kind of standpoint here of price action. We are continuing higher, but we are still above a rising 8 and 20 period exponential weekly moving average. We are still holding above this recent breakout level around 2740. So all things considered, on this intermediate to long-term time frame, bulls are still very much in control and heading higher. Our next level, our next point at which we should be paying attention to is around 2800 or so. That was the pivot high reversal here back in March of 2018, about 4 months ago at this point. And we're going to talk more about that in just a little bit. So if we go down to the daily chart, we'll switch it over to the SPY ETF here. And if we zoom out, you can see this is the daily picture here of the S&P 500. You can see we did make a little bit of progress today. It was a little bit of a back and forth trading day, but ultimately we closed off of those lows, off of the highs, but still some forward progress. You can see when we look at these horizontal levels here, so I got two lines on my chart, 278.81. That's approximately the pivot high here back in late February. This is where the market reversed, pulled back, and then it made this second attempt higher, and it did eclipse this prior pivot here in February, and it got all the way up to about 281, or I'm sorry, 280.31, and that's where it started to reverse, and then we had the bigger pullback throughout March and early April. So when we look at where markets are now, you can see we are eclipsing that first pivot back in February, and we are still below this 280 level, which was around March or so. So we want to see and pay attention to the market's reaction in this general zone. We can also note that, you know, the market does seem to be kind of grinding higher here pretty effortlessly above this 8 and 20 period daily chart. And if we were to look at a more refined level, you could draw a trend line that extends from the past week or so of trading, and you can go down to an hourly chart and draw this a little more refined, but for illustration, just for ease here, I'm just going to put it here and say that we can watch this near-term potential, for a potential breakdown or reversal or a slope change, however you want to think about it. If we start to take down and take out a couple of prior days lows, if we break below this trend line, then we'd have some short-term either reversal signal or pause signal. It doesn't mean we have to just, catastrophically fall lower. It could just mean that we need to move sideways and pull back and digest a little bit. So that trend line covering the past week or so of trading is something you can pay attention to for your real active short-term acute levels. And then for me, I still want to see this market hold above, say, 274. That's where we consolidated sideways throughout the month of May and recently broke out from. It was also chopped back here in February. So to me, a little bit of a pullback, a little bit of move sideways here is totally reasonable. As long as we can hold above 274 and some of those key moving averages, I would be happy. But all in all, I'd say bulls still holding this market up, still grinding us higher. There are some signs of complacency out there in terms of, say, even put call ratio and just general sentiment that does maybe, send a couple of flags up in my head to say that this market seems to be comfortable just moving higher and not really pricing much risk in right now. But for now, that trade to the upside continues to work, but I would just be mindful that we have covered some ground. We are coming back into these levels here, and we do have some complacency in. Doesn't mean we have to roll over now. Doesn't mean we have to roll over at all. We can easily still grind higher. Just something to be aware of for both sides of the table here, whether you're a bull or a bear here. So that is the S&P 500. That's kind of what I'm looking at for those near-term levels. if we go to the IWM, switch over to this other board here, you can see this really has covered even more ground to the upside here. This has been floating higher since very early May, clearly broke out from this big level above 160 or so a couple of weeks ago. It hasn't looked back. It continues to grind higher, and really, you know, all things look good, especially when we look at overhead resistance. There is none, and again, we could draw this this accelerated near-term trend line, and we could pay attention to this level. If we start breaking below the past couple of days lows and this trend line, then that may give you something to pay attention to for you short sellers, or even if you just want to tighten up some long exposure. And then on the Qs here, you can see we are starting to climb back above last week's highs right now. We do have a nice, you know, kind of pivot high to pay attention to now, a higher low, and we are trading above this 171 level and taking out even the highs here from March. So for the Qs, pay attention to 173.50, and then we'll see if we can get some upside progress over 176. So that, I think, is really all I have to say about the market. And in terms of, you know, when I was talking about sentiment and complacency, you know, really I sort of mentioning that in the context of a busy sort of events for the market as well. We got FOMC tomorrow. I believe we got quad witching coming up as well. Is it this week or it might be next week? A little lost in the calendar right now, but we have some near-term catalysts to pay attention to. So you know, keep that in the back of your mind as you think about this market and figure out your exposure. So that is the market environment. Let's take a look here at some other markets now. I'll go to TLT, which really just hasn't done a whole lot this week. It's down just slightly, but it's mostly moving sideways here. It's in the middle of this range that it's been in, 117 to 123. We're in the middle of it, so I don't really have much else to say except for some noisy headache kind of choppy action right in there. Still waiting to see if bulls can maybe put in a higher low from this rally from a few weeks ago all the way up to 123. We've pulled back about 50%. Let's see if we can stabilize here. Gold up next. You can see gold is still just really gone quiet here. Ranges have compressed, so volatility coming out of this. We should be looking at this as a potential, an upcoming move, directional move. Some expansion volatility is likely after going quiet for the past few weeks here. It's still clinging on to this trend line, but we're still waiting to see which way this ultimately resolves. Path of least resistance is lower here now in the short term, but we'll have to see if the bulls can turn that around, clear us above this past resistance around 123.75, 124, and then we'd be potentially back in business to the long side, or maybe sets up some type of reversal trade. That's gold. Silver next. Has been perking up here. We talked about this in last week's video. It is up a little over 0.5% on the week. It had a strong week last week. It's back to the top end of this sideways channel that it's been in since February. We established a position here in silver. A little bit speculative. Hasn't quite got that full breakout yet, but it did make some new, multi-month daily closes, high closes here just yesterday. It pulled back a little bit today. So long some silver, not giving it a tremendous amount of room here, but willing to sit patient through some chop, not looking for an immediate follow-through move here, and we'll see if this can continue to lift higher. But I like the potential after fueling up and moving sideways for such a long time for a potential breakout. So that is silver, that's gold. Let's finally wrap this video up with some oil here. We can see it was up slightly today, was up yesterday. It's up a little over 0.5%. It's challenging last week's highs. Remember, this was in a nice strong uptrend. It had two violent weeks of kind of pulling back, stabilized a bit last week, and now it's trying to add some gains here this week. Could look at this as a potential short-term bear flag, so you got to be cautious here. The 8 and 20 period moving averages here on the daily chart are bearishly aligned above price, so that's not, generally speaking, a path of least resistance to the upside in the short term. But if you're looking for a little mean reversion here, want to play on that bigger trend, that intermediate term trend, then something to look at. But for me, just a little too many mixed signals there for USO. And finally, natural gas here, still kind of moving sideways in this little chop box here. It has been holding this support around 23.25. We've got resistance up here around $24. So paying attention to this range, watching to see how this resolves. For now, you know, the trend is trying to hold up here in the short term, and we'll see how this ultimately resolves itself over the coming days and to close out this week. And that's it. That's what I got for today, Tuesday, on the midweek video. Hopefully you guys are doing well, off to a good start. Thanks so much, as always, for tuning in and watching. If you like the videos, do subscribe to our YouTube channel. Every Tuesday and Friday, we publish videos just like this on the market recap and some technical analysis. So thanks so much, and talk to you on Friday.